Yo, what's good, y'all? Weekly review of week number 26. So I will go over the high time frame right now. As you guys already know, price goes from internal to external. So I'm gonna remove this bar from Monday. So before the week started, we did not have this price action. So what do we expect? A Judas swing into a premium array, and then we want to see a change in the state of delivery, and then we just follow the move. And it happened perfectly as outlined, like per usual, because I'm the GOAT. Let me open up the drawings again. Move this. So, price came all the way to the daily propulsion block. Came all the way to the daily propulsion block to then give us a change in the state of delivery, which was confirmed with GU because we had SMT at the highs with GU and DXY. So after we displaced through here, that is our H1 mitigation block where we want to see and look for entries usually. But what happened was that euro was extremely weak. So obviously, if euro is extremely weak, it is not going to retrace all the way back up. And you could have used intermarket analysis to confirm that because DXY tapped the breaker and EU did not tap its mitigation block. And that's a little gem I just gave y'all. So after that, we distributed down and then we had closed under 50% of the range. What does that mean? It means the second stage of distribution is very likely, and we were extremely close to the drawn liquidity. So this right here, it won't retrace back up to sweep this, for example. It will just reprice real quick. And now these were some beautiful high time frame trades you could have taken, which I won't go over. Let me remove these drawings. And then let's see trade number one. Let me open up my journal on my second screen. Trade number one. This one right here on Tuesday. So this trade idea is based on the H1 smart money reversal. So when we have a smart money reversal, I didn't trade this. I was tape reading this, but you can trade this. But we would obviously first like to see a smart money reversal, like I said in the PDF, and then you would want to trade the continuation after the high of the week has been set. But you can risk it and take this. And why was it a nice trade? Because we had SMT at the highs. And now I wrote this SMT because E was extremely weak. So if you took this on GU, you would have gotten stopped out. As you can see here, sweep, displacement, and then retrace. And it just retraces again and takes it back out. So this was worth the risk, I guess you could say. H1 smart money reversal. We have SMT with DXY and GU, SMT with DXY right here on the entry pattern, and a beautiful unicorn pattern at a key time. So if you took this, you could have, but a negative one was that it is the high of the week and it's risky. Let's go to the next trade. Now the next trade, I really like this one. We displaced through the quote unquote mitigation block / breaker type beat. We leave a fair value gap, we leave a balanced price range. And what are the protocols I gave y'all about balanced price range? We do not want to see price like react slowly from it. We want to see immediate feedback, and that's what we got right here. After we sweep this high, we get a beautiful unicorn pattern on the M15. Now the sad thing is that this setup did not happen in the kill zone, so I did not participate. But the positives are that we are in premium. We had H1 SMT, so EU swept while the other pairs did not. We had a beautiful M15 breaker pattern, and we also had M15 SMT, I think, like this. I think that's what I noted in my journal. And price was in the H1 breaker in DXY. As you guys can see right here. Well, it wasn't in it, it came off it. So that's why this was a high probability trade in my book. The only negative was that it was a early in the day. That's what I don't like. So we could have potentially seen something like this happening again. Unfortunately, that did not happen. And if you put your stop loss into a obvious invalidation level, you wouldn't have gotten stopped out anyways. So then the next trade was in the same day on Wednesday. This one was art. This trade was just art in my book. Now, so New York continuations are already very high probability. And if you are closer to drawn liquidity, it's even more high probability. And if you retrace beautifully into OTE, into premium of the H1 leg during a key time, it's even more high probability. So you have all the books in your, all the confluences with you. And then another confluence you get for free is price sweeping the high one more time on GU and then displacing down, displacement. And then so this is a low key, would have been a breaker pattern if it looked like GU. But see, it only swept right here. That's the breaker pattern. So with that market understanding, you could have been like, okay, this is a very high probability trade. Let me just enter. Let me see. Yeah, that's it. Like there was almost no negatives about this trade. There was no negative. Like it was just art, just perfect. These are the trades you want to take. And you could have used the H1 propulsion block as your PD array or the H1 fair value gap. It was just art. This is just art. These are the trades you want to take. And these are the trades I'm the most confident in taking. Now afterwards, the day after, I was like, alright. Okay, I'm gonna drop some sauce. In price, how are swing points made? Either a break pattern or a swing failure, like right here. So when you are trading, you want a small piece of the pie from premium to discount. Let me swap this up like this. So in this H4 leg, we are in premium. In this H1 leg, when you're above here, you are, if this H1 leg gets created, right? This will be discount below here. So after price taps under discount, you want to be cautious. So how do I explain this? So you just want to be nimble with your TPs, because my logic on this trade was, okay, we are going to rebalance this, and we had SMT between Euro futures and Euro USD. So I was like, okay, that's a cheat code. And luckily we had SMT with GU, else I would have gotten stopped out, and this would have been the entry right here, like this, as a mitigation block. Something like this. So my logic was, okay, we rebalance this H4 fair value gap, and then we are probably going to go down one more time, but we already had SMT with GU. So this is what I wanted to see. High, lower low, higher high, retest, and then continue up. But the market is not perfect, so you got to be nimble with your profit taking. And the SMT right here held. So you could see this as a mitigation block, and then price used the mitigation block as support to propulse up. Unfortunately, but my bias was H4 internal to external. The price would have went down right here, sweep this one more time, and then make the real move. But it did not happen. But because I'm smart enough to realize, okay, we already reached external range liquidity, I'm content with my profits. I'm not going to push my edge. I didn't even want to trade right here, but when it looks like this, how do I say this? Your intuition just takes over somewhat. Like I've seen it so many times. I know the probabilities of it working out. It was worth taking the risk, and I knew price could react from this level. That's why I would rather take my TP right here and then leave really little runners, not big runners. So that's why I was extremely happy with this trade, like extremely happy. And now I'm looking back at it. This SMT right here, I got extremely lucky. So this would have been SMT. And then we just place through it right here. So this candle closed under it. So imagine that would have been not a beautiful trade. Something like this. That would have not been that nice. So even though my bias was not perfect, I was able to still milk the market. That's the beauty of trading. So the positive confluences about this trade was that we were in H4 and H1 premium. We are coming off a H4 liquidity pool on Euro futures. Early shorters got wrecked. We have SMT with GU, but after the entry, unfortunately, and we have manipulation at a key time. At what time on our between 2 and 3-ish, after 3-ish, between just know that this, just collect data. I don't give all the sauce. And the only negative confluence was, okay, we took high time frame external range liquidity. So the high time frame objective has been met. And then you need to be nimble. And I was nimble. Beautiful trade. So the next trade, you guys already know. So right here, we were in even deeper premium. We were almost at like the highest daily point. So then it's worth, in my opinion, to take, because if we are so high in the range, and then if we retrace, let's see a swing. This would be the swing, so we would have to retrace all the way back here. And then let's see, the H1 swing would be something like this. So that would have, like when we retrace, obviously we are not going to perfectly tap discount and then go back up. Now we are going to retrace a bit under it. And that's why I was confident to take this trade, even though it was not counter trend, but even though it was thingy. Like high time frame objective has been met, blah, 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 blah. But I'm not that noob in trading. Like I know that if we have 8:30 news, which we had on this day, and we have 10 a.m. news, that 8:30 will probably go the opposite way of the 10 a.m. news. So I was very confident. Other than that, we were in deep daily premium and H4 premium. Like, look, if we take all this liquidity, it is time to take some more noob liquidity back and then go up. Like, this market runs on liquidity. So that's why I was confident in taking this trade. And there was SMT at the top. And I had a very good entry. So that's why this was a beautiful trade in my book. And the only negative confluence was that this right here is probably the smart money reversal. And this was then the first stage, because you could see right here, after my trade, I took TP. We have a smart money reversal on the lower time frame, like a breaker pattern right here. And then we continue up, and New York continuation is usually more likely than New York reversal, but because we had 10 a.m. news, I used that as confluence to get a little reaction back down. Now, unfortunately, I was mentally drained and I did not hold the trade too long, but if I did, it would have been beautiful. It would have been beautiful. And this was the weekly review. We went over. Wait. I want to give you all a gem. So, this New York continuation is likely, right? But why is it low probability? First of all, in this H1/H4 range right here, we are in premium. In this daily range right here, we are almost in equilibrium. So we are not like in deep discount, like right here, where you want to be shorting. We are near equilibrium. And what do we know about equilibrium? We might consolidate here. So it's actually funny because after it, we consolidated at equilibrium at this rate. So if we are in equilibrium, you do not expect much, but because there was news right here, you got lucky and you might have catch this trade. And it was SMT with GU, and we were in this discount range in the M15 leg. So the positives are you are trading the New York continuation, but the negatives are you trading it at optimal prices? No, not at all. Not at all. And why am I taking this as my H1 range and not like something like this? Because the market goes like this, right? Smart money reversal, and then we have this new leg right here. So this is our new leg. and I could retrace and I could continue down. So is longing here smart? Well, in hindsight, it's not even that smart because it didn't even deliver 2 standard deviations. But like just putting this little confluence of not longing when you're not in deep discount or not longing in counter trend would have saved you this loss. And that's why this, what I teach y'all in this mentorship, is just worth gold, because it is so hard to go wrong with it. And I just journaled 1, 2, 3, 4, 5, and they were all 5 winners if you stuck to the hell. How did that happen? So if you just stuck to the model, those were all winners. And I'm teaching all that. Who teaches that in such a simple manner? If you just stick to the model, if you wait for price to retrace to our key levels, and if you short from premium and long in discount when you get a unicorn pattern in a key time in alignment with order flow, you can almost not go wrong. And you have my analysis telling you what to do. So please, guys, like if you stick to the model, 5 wins, 1, 2, 3, 4, 5, 5 wins you would have gotten if you just stuck to the model. So I hope this weekly review helped y'all, because it sure did help me when I made this. I was reviewing all day. I was so like I could not be bothered to review this week because I already knew price action. I was going to the whole price action the whole week already. But I got a duty. So I still cannot believe that I'm giving all this sauce like that. So enjoy it. Because you just saw proof of 5 wins if you just stuck to the rules. If you just could tell yourself, don't be a lame ass and stick to the rules. It's not hard. It's really not that hard. And the crazy part is y'all know it's not hard. You guys are just making it harder for yourself. And that's the sad part. 5 wins, 0 losses if you stuck to the model. That's just mind-blowing to me. That is just mind-blowing to me. Wait, actually, excuse me. It's not 5 wins because one of the trade was extremely early at this one right here. Wait, not that one right there. Right here. It was at 1:30, so that was outside of our trading hours, unfortunately. But the rest were like not A plus 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 plus, but they were nice. And I even like this one, you would never take this one, even if it's a New York continuation. You wouldn't take this one because it is counter trend, and we do not have a daily change in the state of delivery or a H4 change in the state of delivery, so you are not trading it anyways. That's the crazy part. Alright, I'm gonna stop yapping. Hope y'all enjoyed this weekly review. Good luck trading. Peace.